All right, we are now live on YouTube, so we're going to start. Please, let's begin fast. Don't know if my data will keep me along enough for the class. Okay. All right, so we're going to start now. Now, what we're talking about, I said what we're discussing today is called moving average. Moving average. Why do we say moving average? And why is moving average very important in trading? Why is moving average very important in trading? What I want to tell you now is that this moving average, it's one of a very important tool that is used by over 98% of traders. 98% of traders. The question is, if it is used so frequently by so many traders, why is it that people lose money? That's the next question you can ask yourself. Yes, I like I tell people currently in the advanced class, I told them that, look, there are reasons why people lose money in this market. What the market is get at is they're interested in collecting that your money. So as a result, they will employ different things in order to make you run away from the market. But when you know what you're doing, you know. When you know, you know. So what we are talking about is called moving average. If you look at the price moves. Price moves. If you look at the chart, let me share my screen so that we'll go straight to business. We don't have time to waste. Let me get my chart ready. Okay. All right, so this so that we don't get confused. This would do us good if we mute our mics. Okay, now this is the chart. If you look at this chart, this thing is this one is as of today. We're talking about February 2022, February 28, 2022. That's the date for today. That's this current price. This price. This is a weekly time frame. Now, if you look at this chart, look at the chart. I'm just scrolling my chart back. Look at the charts. Look at the chart. Let's go from where it started. That's on the weekly time frame. What I have there now is 23rd of December, 2020, 2001. So 2001, 2002, 2003, 2004, 2005, 2006, 7, 8, 9, 10. That's 10 years. 11, 2011, 2012, 2013. So 2020, that's 20 years. Now we're talking about 2022. That is 22 years. That is where this chart came from. 2001, the chart came to. Please, if you cannot hear me, just give me feedback, please, so that I will not be talking to myself. So this chart is from 2001 to 2022. So what I have on my chart now is 22 years that this chart has moved. 22 years. So that means the chart is moving today, tomorrow, next tomorrow, 3 days later, 4 days later, 1 week later, 2 weeks later, 3 weeks later, the chart is moving. Now, as the chart is moving, the chart is either moving up or it's moving down. In your basic class, you were taught trending market. Either the market is trending upwards or it's trending downwards. If you're trending upwards, you are meant to understand that you need to buy. You look for opportunity to buy. If it's trending downwards, you look for opportunity to sell. If the market is trading on sideways, we say the market is consolidating or the market is ranging. And at that point in time, if you are a day trader or a swing trader, you are advised to stay clear from the market. But if you are a scalper, then you know how to trade it. You just need to put your borders, your high and the low within a particular period, then go to a lower time frame and start buying and selling within the short period of time. That is how to trade the ranging market. But that's not what we're talking about. We're talking about moving average. Moving average is called dynamic support and resistance. That is what moving average is. Dynamic support and resistance. That is what moving average is. We have, I told so many persons, those ones that are new on this chart, that on this class, that they should get this manual. I told you that we have learned support and resistance. This we talked about this psychological round number. We've talked about what's called trend line. Now we're talking about moving average. This manual is very impactful. This manual is over 120 pages of different topics, that all the topics you need in your intermediate, and it is prepared based on experience and not based on what you have out there. So we say this moving average, we have types of moving averages. We have simple moving average, we have exponential moving average, we have smoothing moving average, and we have linear weighted moving average. But I want to tell you today that most traders use what is called the simple moving average and the exponential moving average. That is what traders use. Most traders, 98.8.9% of traders uses what is called the simple moving average and the exponential moving average. But I tell you today that the difference between these moving averages are not much. They are actually not much. Now, we said moving average serves as dynamic support and resistance. Dynamic support and resistance. What it means is that if the moving average is on top of if the price is on top of the moving average, that moving average is serving as a support. That moving average is serving as a support. And remember, we said support is a place where you need to buy, and resistance is a place where you need to sell. That is what we have said when we discussed what's it called? We discussed the support and resistance. We discussed psychological round number. When we discussed trend line, we said if the market is trending, you use moving average in a trending market, not a ranging market. A trending market. Once you have seen, you plot your moving average. If the price is on top of the moving average, I'm giving you a signal now. If the price is on top of the moving average, look for opportunity to buy. If the moving average is below, if the price is below the moving average, look for opportunity to sell. If it is below the moving average, look for opportunity to sell. And where would you sell? Where would you buy? That is what we have come to tell you today. So take it down that the moving average serves as dynamic support and resistance. Dynamic support and resistance. Now, for us to go dive into this moving average, I want to tell you something. Now tell me, if you're asked, how does the price calculate this moving average? That is the question you will ask. How does price calculate this moving average? Because when we talk about moving average, you are not expected to do any calculation in Forex. You are not supposed to do any calculation. The system is developed in a way that it will do all of those things for you. Okay, we'll calculate everything for you. So now, what do you mean by moving averages? Now, if I tell you that, look, Mr. King, that we have 5 vehicles moving at a uniform speed, 5 vehicles, different products of the vehicle. We'll have Mercedes-Benz, we'll have Toyota Camry, we'll have Honda, we'll have Chevrolet, and we'll have Volkswagen. And we say these vehicles are moving at a particular speed. Let's say the Mercedes-Benz is moving at, let's say, 10 kilometers per hour. Mercedes-Benz, 10 kilometers per hour. We're talking about the Toyota Corolla moving at 15 kilometers per hour. We'll talk about Honda moving at 20 kilometers per hour. We're talking about Volkswagen moving at 8 kilometers per hour. We're talking about Pathfinder moving at 30 kilometers per hour. Now, somebody said, Mr. King, please calculate the average speed of these 5 vehicles. Now, what Mr. King would do, we all know the simple mathematics we learned in school, is that Mr. King would take the total of the speed of the 5 vehicles and divide it by 5. Now, Mr. King will give me the answer, the average speed of the 5 vehicles. How did he get it? He calculated the total speed and divided by 5. That is how he got the average, and that is called simple arithmetic or simple average. That is what this market does. When we talk about moving averages will use different periods in calculating our moving average. So what you have said, if you say, I want a moving average of 5 periods, 5-period moving average, what it means is that you are telling the system, please, for the past, if you're on a daily time frame, for the past 5 hours, give me the average price of this market. That is what you have just, the command you have given to your MetaTrader 4. That, look, I want to plot moving average of 5. What it means is that you're telling the price, your system or the MetaTrader 4 to give you the average speed that, the average price that this market have done within the last 5 hours. If you do that in within the 5 days, if it's a daily time frame, if you do that in 1 hour, you're telling the system, give me the average price that this market have done within the last 5 hours. If you are on a 1-minute time frame, it means you are telling the system, give me the 5-period, the average speed, the average price that this market have done within the last 5 minutes. Because one candlestick in 1 minute is one candlestick in 1 minute. One candlestick. A minute time frame means one candlestick. One candlestick. It's what has happened in 1 minute. That's what you see as one candlestick in 1 minute. I hope you were taught that in your basic class. That's not what I'm going to. I'm not going to basic class. That's why we say don't miss your basic class, because it's a foundation that we're building on. Because all those little terminologies or rudiments will not be delving into it. I might just be saying it in passive. So now what it means is that if I plot my moving average on this chart and I see the price on top of the moving average, it tells me that the market is uptrending. The market is uptrending. So I should be looking at opportunity to buy that market. I should be looking for opportunity to buy that particular asset. That is what it means. Now, let us see. We say we have 4 types of moving average. We've talked about linear, simple moving average, exponential moving average. We're talking about smoothing moving average and linear weighted moving average. These are the types of moving average you have on a chart. I will actually not dwell on these theoretical aspects. I have advised you can get your notes and go through it. Okay. Now, This is a moving average. Now we have we're talking about moving average. This what we have on our chart is on that slide is moving average crossover trading strategy. We'll come to that. Now this is chart representation of moving average crossover. Okay, when you see moving average, you see that you're using one moving average in your trade, one moving average. Let us go to our chart so that we'll start plotting this thing and see how it works. Now, look at this. If you want to put a moving average on this chart, if you want to put a moving average on this chart, what you need to do is that you come here. Now, I didn't talk about support and resistance because I've already told you that moving average is dynamic support and resistance. As it's following the price, as the price is moving, it is following the price. And another rule is that the smaller the period of that moving average, the faster it is to price. The smaller period is faster to price. It follows the price. Why? Because it takes, if it is 5-period moving average, it takes that system to calculate only 5 candles and give you the average price. Then if you have another one, which is higher than 5, let's say 10, that 5 will move faster than the 10. So you will hear me start using the faster period moving average, which is the smaller period moving average, and the bigger period, the slow period moving average. At this instance, we're talking about the one that is bigger. 10 is bigger than 5. 20 is bigger than 10. 50 is bigger than 20. 100 is bigger than 50. 200 is bigger than 100. So when you hear me say, I have two moving averages on my chart, the faster period moving average means the one that is smaller. That is what it means. You'll be hearing me use this terminologies. The faster period moving average and the slower period moving average. What it means is that if I plot a 5-period moving average and I plot a 10-period moving average, the 5-period moving average will be close to the price, will be gumming the price. It will be faster than the 10-period moving average. The 10-period moving average will be coming behind, but the 5 is following price because it takes very small candlestick for it to calculate and give you the price. But that of 10, it will calculate 10 candlesticks. If you put 20, it will lag. It will tell you it will be long, it will be wider than the 10. So now, if you're using one period, one moving average, what it means is that, let me put my moving average on my chart. Look at how I put the moving average on the chart, please. Listen. My moving average, this is moving average. At this place where I have my indicator list, I will click on it. On this indicator list, I will go to trend. It is called a trend indicator because it is on the body of the chart. It is on the body of the chart. By the time we go to oscillator, the likes of relative strength index, the likes of MACD, the likes of stochastics, the likes of blah, 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 that have their own window different from the chart. It is called an oscillator. We are coming to that. It's a gradual process. Now, this is moving average. Let me put the moving average. I will come here, I'll click on this. I'll go to trend. If you go to trend, you'll see moving average. If you see moving average, you'll see average directional movement. If you plot it, if you put it, it will be on your chart. It will be where this candlestick is. That is where you found it. You have Bollinger Band, it will be on your chart. You have envelopes, it will be on the chart. Ichimoku Kinko High, it will be there. Moving average, it will be there. Parabolic ZAR, there. Standard deviation, it will be on your chart. But all of these things, we have chosen the indicators that you need to be successful in this market. If you say you want to learn all the indicators, my brother, I will tell you that you will not succeed. You know why? Because too much analysis leads to paralysis of analysis. What you just need, if you understand moving average, my brother, my sister, you do not have much to do in this market any longer. Once the moving average has given you your direction, you engage your buy or your sell. Now, I'll come to moving average. I'll click on moving average. Now, on the moving average, you have parameters, we'll have levels, and we'll have visualization. Now, I'll go to parameters. That's where our concern is. On period, I will put, let me put 10 period moving average, 10 for example. You can put any number you like, there's no problem. You can, that's why after the class, you can actually do a back test of anything you want to use in moving average. But for period, it means that if I put this 10, I'm telling this system, please calculate 10 candlestick and give me the average. On shift, leave it as 0. Now I'll say simple or exponential. Now, let me explain. I said traders use simple or exponential, most of them. Most of the traders, like I talked about 98% of traders using simple or exponential. Simple is if you have a higher period moving average, simple moving average, it serves as a direction. It serves as a direction. Remember, when we're doing an support and resistance, I told you as a trader must have 2 time frame, one for direction and one for trade, when you enter your buy or sell. The same applies to moving average. You should at least have 2 moving averages on your chart. Some people have 3 moving averages, not a problem, but at least 2 period moving average. But we'll come to why you should have 2 period moving average. The simple period moving average most times has to do with the higher period moving average, while the smaller period moving average, you're supposed to use exponential. Exponential in that it adds weight to the later part of the price. What it means is that exponential is for entry. Exponential moving average is for entry, where you will buy or where you will sell. That is what we use for exponential. And we use it most often in a smaller period moving average. Now, if you want to write, if you are a scalper, because the moving average you use determines the kind of trader that you are. If you are a scalper, that means you don't stay long in the market. You collect 10 pips, 20 pips and run away for your life. If you are a scalper, what you should use is 5 and 10 period moving average. 5 and 10 period moving average for a scalper. If you are a day trader, please listen. If you are a day trader, you will use 20 and 50 period moving average. Day trader, 20 exponential and 50 simple period moving average. The 20 is you use it as your entry. Whenever price come back to touch your 20 period moving average, is an avenue for you to buy if the market is on top of the moving average. If it is below the moving average, it's an opportunity for you to sell. If you are a swing trader, what you should use is 50 and 100. Swing traders, 50 and 100 or 200, as the case may be. Swing trader and position traders use the same moving average. As a position trader, you will use 200 period moving average in your chart. 200 period moving average. That is why most times when you listen to like the financial channels, the likes of Bloomberg, the likes of CNBC, the likes of Al Jazeera, the likes of Euronews, what you'll be hearing is that they will not tell you moving average of 10 and 20. They don't have time for that one. They'll tell you that, look, Euro USD is rallying above the 200 period moving average. What it means is that 200 period moving average means that the price, the chart will calculate 200 candlestick and give you the average of that price. That moving average is used by investors. Once price is above 200 period moving average, my brothers and sisters don't have anything to do with selling that market. Look for opportunity to buy. If you must sell, you should be selling short and not for too long. We'll tell you if you're selling when the market is on top of the 200 period moving average. It is called a counter trend. You are trending against the trend. That's called a counter trend. What you need to do is that you need to be very careful. and you need to buy or sell to the moving average and hands up and say, I surrender. Then you continue the trend, because in this market, the trend is your friend. What you do when you open your chart is that try to identify the trend. When you identify the trend, then you glide with the trend. You will not have a problem in your trade, even if you have the drawdown. But if you know that you're actually on the trend, you fear no evil. It's just like, that's why in a place in Owerri, they said it is called Aladima. Aladima means the ground is good. If you stay on the ground, you fear no fall. You cannot fall. But if you stay anywhere above the ground, then you risk risk falling to the ground. But if you sit on the ground, I wonder where you fall. You're not falling anywhere. Unless 8 weeks will take you down. But for now, we have not experienced that in Nigeria, and we're still enjoying our good. So now, I want to plot my moving average. This is 10-period moving average, and I set to high. You choose apply to low price and weighted close. Anyone, you can backtest it and check which one best suits you. Now, but I said apply to close. Apply to close. What it means is that I have just given a command to this chart. I say, see, I want you to calculate 10-period moving average for me and give me the average, the average. And now it should be at the close of the candlestick, not when the candlestick has opened or when the candlestick has attended to the highest price for that particular time frame, or when the candlestick is at the low of the price. No, but when the candlestick close. Why? Because why the candlestick open and in the market today? This morning we saw that Russian rupee was USD Russian rupee was buying aggressively. Why? Because of the tension between the Russia and Ukraine. It affected their currency. People started selling Russian rupee because they don't know if what will happen. That's what you'll be told in your advanced class, that breaking news affects this market. And that is why you see on Thursday morning, midnight of Thursday, breaking, midnight of Wednesday, breaking Thursday morning. If you were buying, the market scattered. In fact, the market scattered, and so many persons that were in profit that did not lock their trade all went to loss. Why? Because of the invasion of Ukraine. That alone moved this market. And that's when we'll go to fundamental in advanced class. We'll be telling you all of this. I told you this package is a full package. It's actually what you cannot get out there free of charge. I can beat my chest and tell you that. You cannot get it out there free of charge. But we have, based on thanks to FSPs that have paid this cost for you. And what they say they demand from you is just a fund to fund your account with FXPs. I don't think they're actually asking for too much for you to trade. They're not asking for too much. They're not saying you should give them money. They're not asking you for money. They say, come and learn so that you know that this market is actually a market that you can make money. Okay, so let's continue. Any color that best suits you, that tickles your fancy, no problem. I can change this into blue. If I want to tick in the line, I'll come here and tick in the line, no problem. I'll click OK. Now, look at it. Have you seen the moving average? Somebody will tell you, that rope, that long rope that is on your chart, what is it? Now you know that it is moving average. It is moving average. And this thing is moving average 10 on our chart, moving average 10. Now look at it, brothers. Look at this point when the price is above the moving average. At this point, price is above the moving average. From this point to this point, look at, this is 16,520 pips buying gold. This is since 2001. If you're using moving average of 10 on exponential, on gold, on a monthly time frame, what you would have just done is put your buy here. You'll be seeing sell. Look at sell. All these things, the red is sell. But look at what happened from here, that this market went above this moving average. Market came to this high and did 16,454 pips. 16,400. Even if you're using 0.01, you would have made $16,000. Somebody is there now saying, just using moving average, you would have made $16,000 with your 0.01. If you use, you would have made, you would have made $1,636. If you use 0.1, that's when you would have made $16,367. $16,367. You would have just enter your buy here, go and rest, just leave, just close your laptop, carry the password, write it somewhere, and keep your laptop and just be doing your business. For how many years that this market have rallied up, you would have, even if you don't want to do anything in the market, just hands up, keep your laptop, lock it, close it, and leave it. Just keep the password somewhere. You see that you would have made, with 0.1, you would have made 16,500 and something pips. And you know, gold is not like currency. Gold has very high pip value. This thing, by the time you get this, once your governor, if you are in this trade, once your governor is buying a land or buying a space, you will buy the next one that is close to his own. Even if he's not careful, you will buy his own because you have the money. Why? Trading the financial market. Now, look at it. Look at this point. This market was going up here. It came to this point, it break below. The rule of trading moving average is once you see your moving average, if price will touch your moving average, it will go up. It will come back as a pullback. Look at this sell. That person that is saying he's selling, you will just sell to the moving average. By the time you sell to the moving average, it gets to the moving average. It did not break below. You continue your buy. Look at it. It's expected that this market break below at this point. You would have taken your exit and run away because we don't know if this market will continue to sell. But the market came back again, no problem. It came back again to test the moving average, you buy. Look at it. It came back here again to test the moving average, you buy. It came here again to test the moving average, you're supposed to buy. It came here to test the moving average, this bearish candlestick, you buy. It came back with these two bearish candlesticks to test the moving average. Look at the massive buy. The market came back again. It is expected by this point, since it breaks below the moving average, you're expected to take your profit and run away if you are trading moving average strategy. Now look at this place. This market came down below here, break below. It did not continue like it has always been doing here. It came back to test this moving average. Look at it. It did not break above to continue the buy. The market started selling. Came back again to touch it here, sold. Came back here, sold. Came back, sold. After this point, it went up, and look at it. The market break above the moving average. I wait for a retest. Retest. This thing is called a retest. This thing, this sell that happened there is called a retest. And you did that retest, you just wait. Let it come back to the moving average. If it did not break the moving average, you buy. We have taught you candlestick anatomy and physiology of candlestick. At this point, that is when you'll be looking at a candlestick pattern. You'll be looking at hammer. You'll be looking at inverted hammer. You'll be looking at engulfing. You'll be looking at harami. You'll be looking at tweezer at this bottom for a buy. Once you see it, initiate your buy. Now, where will you take as your stop loss? For example, if I had entered this market here for a buy, let's say this buy here, my stop loss would have been somewhere here. I'll take the next low as my stop loss. Have you seen that this market, immediately you did that, this market rallied up. The market did not come close to that stop loss. And the market bought and bought and bought and bought. If you are trading using moving average strategy, it is only when price has broken below the moving average and closed below that you will take your exit. As long as price did not break below your moving average, my brother, you have no reason to take your profit. Now look at this. At this point, the moving average break below. Look at it. At this point, the moving average break below. Imagine that I enter this market here. Look at my stop loss. Now, ordinarily I was supposed to take this point, might take profit. If you understand your support and resistance at this high, I'm supposed to take my profit when the market gets to this high. Why? Because the market has come to a high to do what? Because based on what we learned in support and resistance, that history repeats itself, that the market can come to that high and reject, like it rejected here. That is why we say support and resistance tells us that what has happened in the past, it is most likely to happen this time. It has high probability to happen this time. And that is why we take leverage of the fact that it happened here, the market sold, that when the market is buying again, it will come to this point and the market will sell. You would have taken your profit at this point. If not, you don't take your profit, you lock your profit and wait. By this time, this market start coming down, you would have taken your exit before it come here. You agree with me that at the point the market came to this point, the small profit you have made, market have taken some, but market have not taken all. At this point, market have taken some of your profit, but you are still in profit. Look at it. You are still in profit from here to, so, look, let's say you left the market here. You would have been in profit at 4,253 pips. But if you are taking your profit here, you would have been in profit of 6,451 pips. Have you seen the difference now? So that means if you're trading with your moving average, you must have a sound knowledge of support and resistance so that you know where to take your profit. That's why when somebody tells me, where will I take profit? I begin to ask, am I supposed to tell you when you are full, when you're eating? I'm not supposed to tell you when you are full, when you're eating. You know that's why when they ask me that question, I get tired and confused. Because I don't need to tell you when you are tired of collecting profits. You know your account size. I have said that. And in the advanced class, those currently in advanced class are enjoying that. We are really telling them why people lose money in the forex market. That's what we're explaining. We're explaining to them. So we'll tell you that, see, you know your account size. If you have a $100 account, do not expect to be having $10. $10 is that you have done 10% of your account size just in one trade. And somebody will tell you, come, let me trade for you and give you 10%. You'll be happy and say, thank you, God bless you. Every month and it gives you 10%. But now you are waiting for 10% for one trade. Is that no greed? And that is the greed that keep people in this business. In the advanced class, we'll be talking more of that. Let's be talking about strategy here. So now, this market have done this. If you don't want to trade support and resistance, let's say, I'm tired of support and resistance, it's not my thing. I want to be trading only moving average. What you do is that you enter your market for a buy here. As this market is selling, there are two things that will be in your mind. It's that this market will come to this moving average and bounce back and continue the buy, or it will break below. So you wait until it gets to this moving average, either break below or continue the movement, then you continue your market. So at that point in time, you're looking at candlestick pattern to tell you when you get to this point, you see a Marabuzu candlestick that breaks that moving average, then you need to run away. You know, remember Marabuzu, a barhead, you need to run away. When you see that the market came down and created a hammer, leaving a wick behind the moving average, it tells you the buyers are in the market and buyers are aggressive. Hope you've not forgotten. If you've forgotten, please go back to your slide and make justice to that. That slide on candlestick pattern is very explicit, and it's something that even a 2-year child that knows how to read and can comprehend will have a feel of that candlestick pattern. And that is why he said, go back and look at that candlestick pattern and ensure you understand all that is discussed in that candlestick anatomy. You know, we were all surgeons last week. We went to the theater and we dissected candlestick. All right, so now this is the moving average. Now let me go to another one. I want to add another moving average to this my chart now, so that I will tell you another strategy using moving average. Now look at this moving average. I want to put moving average here. I want to put 20 period moving average. I'll put simple moving average. Then what I'll need to do is apply to close. I'll change my color, I'll change it to black. Now I'll click OK. On level, just leave it like that. Visualization, leave it like that, all time frame. What you're concerned with is just the parameter, then click OK. By the time you click OK, look at what this market is doing. Are you saying now, are you seeing what the market is doing? Now, this moving average strategy, these two moving average strategy is what we call the moving average crossover. Look at it on the slide here. Moving average crossover trading strategy. You can read it if you have not gotten the manual. Get the manual and read it so that you understand the strategy on trading the moving average. But we're going to explain it also. Now look at it here. Look at the moving average chart representation of moving average crossover. Look at what happened here. This is 10 and 20, exactly what I have on my chart. When are you supposed to buy? When are you supposed to sell? Let's go to our chart. Now the question is, when am I supposed to buy? When am I supposed to sell? That's the two things we do in this market. We either buy or we sell. That's two things. If you do in the chart, on this chart, it's your concern. If you're here to watch candlestick or what we do is that where are we to buy, where are we to sell? Josh, where are we to buy, where are we to sell? That's the question many people keep asking. Now the answer, you will buy when the smaller period moving average cross the bigger period moving average. If it is crossing it from above, it gives you a signal for a sell. If it is crossing it from below, it gives you a signal for a buy. Now, you agree with that my smaller period moving average is what's it called? This is blue, right? Is the blue, while my higher period moving average is the black. So the smaller period, like I told you, move faster than the higher period moving average. So it will cross it fast as the price is selling. It will cross it fast. Now, what you do is that at that point, when it crosses it, look at it here. Look at this point when it crossed it. It crossed it here. It crossed it from, if you are seeing what I'm saying, it crossed it from above, going down, giving you a signal bias for the sell. It crossed it below, going down, a signal buyer for the sell. Now the next one, look at it again, where it crossed it from above. From below. Look at it here. It crossed it from below. Here that I told you to enter for a buy the last time. Even without the 2-period moving average, I've just told you buy. Look at it. At this point, when it crossed it from above, you initiate your buy. You initiate your buy. Remember, you must wait for that candlestick to close. You must wait for the candlestick to close. So at this point, when it crossed it from above, from below, it is a strategy for a buy. A strategy for a buy. A strategy for a buy. I'll be additional some secret trading moving average. We are doing that for you. Now, I've just told you moving average crossover. Now, I want to tell you another one. Once you have, look at it now. Let me give you another one. Please pay attention. Pay attention. Pay attention. If there is anybody that is distracting you now, please bind that person and tell that person to go. Listen. If you are trading moving average, Jared, so when you are trading moving average, the two moving averages, I've shown you when you're trading one. You only buy when price comes to the moving average. When price comes to the moving average, that is when you buy. If price is above the moving average, when it comes again to that moving average, that's when you buy for a single moving average. When you have a double moving average, what you are looking at is that you're looking at moving average crossover. I have discussed that. Now, I want to give you another secret. Look at it. When you are, this is a monthly time frame. This is a monthly time frame. Monthly time frame. Monthly time frame. Now, look at it. If price, let me not go to monthly time frame because most of you will not be doing monthly time frame. Let's be realistic. Most of you will not have that patience on monthly time frame. Let me go to daily time frame. Let me go to daily time frame. Now, on a daily time frame, if you are trading moving average, yes, if you are trading moving average crossover on a daily time frame, one thing you must do, go to 2 time frame lower. Go to 2 time frame lower, because anybody that asks me this thing again, for me to bring out my time, you will pay for my time. That means you're telling me a personal class. After now, that's what I'm saying. That's why I see people that have missed this class today. Well, I don't know. They will either watch the YouTube channel, or I don't know how they'll get it. Now, if price is rallying on a daily time frame, now you want to take a direction. Price is above the moving average. And the moving average, the smaller period moving average, has crossed the higher period moving average. What you need to do is that if you go to like H1, I say 2 time frame lower, not H4. When you go to H1, what you'll be looking at is opportunity to buy. Opportunity to buy. Opportunity to buy. What do I mean by opportunity to buy? You will only buy when the smaller period moving average has crossed the higher period moving average. You engage your buy. When it has crossed, you engage your buy. And as you're buying, you are on that trend, remain in that buy. You wait for, look at this now. Look at it, don't wait to D1. Look at the moving average is above. The moving average is above. They're telling us a bear market. They're telling us, sorry, a bull market. What you do is that when you go to a lower time frame, like H1, now look at the smaller period moving average. It's as if it is selling. That is not your concern. Leave that market. Leave that market. What you do is that once you see the period moving, the smaller period moving average cross above the higher period moving average, please engage your buy. Engage your buy for that market. Engage your buy. Why? Because the higher time frame is buying. So the lower time frame that is selling is just doing a pullback. It's doing a pullback. Don't worry, with time, by the time we go to mentorship or something, we'll be taking you through different time frame, a different time frame trading analysis. Sorry, multi-time frame, yes. Multi-time frame trading analysis. That's why some persons will tell you, okay, Josh, in G1, the market is buying. In H1, market is selling. I am confused. Yes, you'll be confused if you don't know. That thing that is happening in H1 is a pullback. The trend is what is happening in G1. That thing that's happening in H1 is a pullback. It is pulling back to a support to buy. So what you do in that your H1 is wait for it to get to a support, then you buy. Once it has gotten to a resistance, it will sell again. It will get to a support, you buy. So what you just be looking, that's why you hear me sometimes say, look for opportunity to buy. Okay. So I've given you a second strategy, trading moving average. If you do that, what is called riding the trend strategy. Riding the trend strategy. I told you about a seminar I attended yesterday. Somebody said, that will teach you a strategy I used to trade, and it taught him riding the trend strategy. But people say, at the end of the day, to them, they have learned a strategy, and they paid so much money to learn that strategy. But here in UTB Trading Academy, based on the fact that UTB FSPs have subsidized it for you guys, they say we should teach you free of charge. And honestly, we are not hiding anything. We are telling you as it is. That is why we told you that we'll give you a seal of success in Forex. But how you use that seal, that is what we cannot guarantee. But if you apply everything we teach you, you have a seal from UTB Trading Academy to succeed in trading the Forex. Anything that has charts, you can trade it. Anything that have charts. Even if they say Nigeria now, they put it in chart, you can trade Nigeria and trade it. Anything that has to do with chart, anything that somebody tells you to solve for him, tell the person, put it in a chart, I will solve it. That's what I tell people. Anything that has chart in this world, I will buy it and sell it. I don't need to hold the physical thing. I don't need to. As long as it has chart, I know where to buy and know where to sell. So that is what we're talking about. So once you get all of this and you get to that, when you have gotten this, they have told you about it. I've told you about two trade strategy, trading the forex market. I'll give you the last one as a giveaway. Last one. Now another one I trade using. That's why if you look at my trade sometimes, hey, look at my trade. This is a moving average. This two is a moving average. These two moving average is called a parallel moving average. Parallel moving average. They never meet. Remember the one I told you about crossover? They never meet. You see this one too. These purple and blue. I don't know. Some persons will now tell me this is cockroach purple. No problem. Whatever purple it is, I don't know whether it's purple or not. My own is not. The color is not my problem. The problem is I'm putting it on my chart and it's telling me direction. These two moving average can never meet. They are two railway. They are two rails. They can never meet. I use it in my trade. I use it in my trade. Of course, I should charge for this one now. I should try to tell you this one. I've given you the one you need to trade. Let me charge for this one. Just charge like $100. What do you guys think? Or you want to price? Hello? Am I the only one here? Yeah. Average has kept many people quiet. Can you hear me? Wisdom, can you hear me?
Yes, I can hear you.
Okay. All right. So I thought I'm the only one in this class, but thank God some other people are here with me. Okay, so this is my two moving period, two moving average period. Never meet. And how if it is in the middle, it's a range. I don't do anything. I leave it unless I have taken it from here for a buy. If I've not taken it for a buy, I'll wait for it to come up. Moving average is a lagging indicator. It's a lagging indicator. But if you understand price language, you understand your native level, you understand support and resistance very well, you understand the psychological round number, you can actually engage this market early enough before it continues to buy. Moving average traders will wait for it to close above the moving average for them to buy. But you that is a price language trader that understand your native levels and understand that if market have left this native level, it's going to this native level, no matter what the market does, no matter anything it does, that it will get to that native level, you know that, okay, I'll need to initiate this market for a buy at this low. If it crosses above the moving average and close above, then I will get the walker phone because my bias has been confirmed. I'll come there and sleep. So that's the two moving averages I use. If it is ranging within the inside the moving average, to me, it's a range. If it crosses above, it's a buy. I will buy it until it breaks below. Look at it. This market closed above here. Look at this point here. Closed above. Even when it is selling, until it has broken below the second one, I will not leave the market. It has broken below the second. In fact, to me, I like taking the market at this second one, not the first one. The second one, if it has broken below the first one, then I'll be looking at candlestick pattern for the second one. Once you get to the second one and start giving me a candlestick pattern for a buy, I will engage the buy in this second one, not the first one. Because if I enter for a buy for the second, this first one, it might take me to the second one and it will give me a drawdown. Some persons don't like seeing minus in their charts. But I tell you today, please, you will always be seeing minus in your chart, but don't allow the minus to be much. That is what will tell you in risk management. So I would like to take it at this low, this second one, then I will initiate my buy and buy. As long as it comes, it has not broken below the second one, not the first one. It's at liberty to break below the second one. Enter into my reel, no problem. But once it closes below the second one, then I'll take my exit. But if you look at this market, at this point, this market did all of these things. The market never closed below. From here, it went up. At this point, look at market did over 1,290 pips for GBP and ZD. I put it to you that if you are using $0.29 traded this market, $159. And we're saying fund $50 or $100 to trade the Forex market with FSPs. Look at what ordinarily, I don't know, and of course, I know you will not be patient to take all of this, but I put it to you that if you hack in to all that we are teaching you, even the Bible book of Proverbs says that you will make your trade successful and you will act wisely on the charts if you apply all that we are teaching you. Even if you say, okay, I want to take 10 pips, I want to take 20 pips, I want to take 30 pips. You're not doing that in D1. You are going to lower time frame to do that. Okay, I think we've done justice to moving average. Let me open the room for a question so that if there is time, we actually started at 8:30. It's 8:30, 9:30. We've done 1 hour. So we'll just do another 20 minutes. I will go to relative strength index so that we'll see how we can combine it with moving average. Continue, brother.
Hello, please. I think we can, I'm sorry, but I think we can't continue to relative strength index.
Please, can you increase your volume a little?
I said, I think we can continue to RSI today because I need to understand this moving very well. This very last part where you have these 3 lines, I don't understand the explanation. And then this, these 3 lines for your moving average, like this last one you showed us. No, like the moving average, the 3 lines.
It's 2 lines. No, this one is the one I told you before. Now, this one is the one I told you before.
Yes, I need more explanation.
Is these 2 lines I was talking about? Were you there when I started the single and the double moving average?
Yes.
Double something. I said, this one is this 2 moving average. Remember, the one I told you was close, apply to close, apply to close. This one is not applied to close. This one is applied to high and low. This is period 20 and period 20 applied to high and low. So they don't meet. You understand? That's why I said during your back test, you can decide to do anything you want to do in your chart. Look at how it happens. If it gives you your trade bias, if it is happening and you see that price is reacting very well, my brother, you take it as a strategy. If you take it as a strategy, monitor the chart, even if it's only moving average you're trading. Bros, you can make money in this market than going to meet other persons and ask them, okay, what are you trading with? The man tell you I'm trading with Fibonacci. You leave your moving average, go to Fibonacci. You don't know how the man is trading his own. You lose money. You say, no, that one is not working. You go back again, okay, Mr. King, which one are you using to trade? Mr. King said, I'm using RSI. He said, okay, I think RSI, as in when it gets to 70 or 80 on 20, I buy and sell. He said, yes, okay, go there. You lose money. You come back, no, that RSI is not working. MACD, you go back, MACD is not working. But somebody is using MACD to eat. Like my boss, what he uses to trade is only MACD. And he's making money.
No, I'm saying this very one that they don't meet. I don't understand the explanation for this. Like, when do we take our trade? Because this one, you said they don't meet. But the other ones, one you explained, you said once the
I said I will buy when, for me, I buy when the price is low here. At this second one, not the first one. I will buy here. I will prefer to buy here because I can buy on this one here and the market will take me down. Look at, if I had bought at this point now, bought here, the market will go up. Look at it now. It has taken my profit and I'll be scared. I want to run away from the market, only for me to run away, see the market start going up. So I'll prefer, depending on what you want to achieve, depending on you. You don't use my own strategy to trade because you may not have the kind of patience that I have. Some persons have different, that's why in your advance, we'll be talking about trading psychology. People have different, barb me the hair when you barb Mr. King. You with Mr. King get the same head. You with King do not get the same head. If you be say that hairstyle will fit them, but you know go fit you. So look for what fits you. That is what we're saying. So this market, I would say I've done my back test. To me, I would like to take this trade based on what I know. There's no problem me taking on top of this point. That means I'll be willing to endure this drawdown to this second one. But if I don't want the drawdown, I'll wait for price to come to this second one for me to engage my buy. And if I buy and the market comes and close above this first one, hallelujah, I will sit down in that market and look for a mocha phone and lie down there. Do you understand? So if I buy at this low and the market comes down, if it breaks below this second one, I will take my exit, because to me, that market has changed direction. But if it does not break below the second one, I will engage the buy. If I engage the buy, even if the market is coming down to this sort, break below the second one, my stop loss will not be huge, will not be much. It's something I can cope with. I will leave the market. Do you understand? But when the market is coming to this second one, that is where I'll be looking at candlestick. That is where I'll be looking at candlestick. Look at this one here. When this candlestick, this thing happen, I might be tempted to buy. I'll be tempted to buy, yes. But I'll put my stop loss below, a little below this moving average, the second one, so that this one would have taken me out. But the loss will not be too much. Look at it. I'll engage this market here now. This market now, at this point, when this market did this, even if it is this one, when it got to this point, it has touched this low. I will engage myself, take somewhere here. Look at, I'll just say this is okay, this is 89 pips, because the higher time frame, depending on the kind of trader that you are. Even if you, of course, if you're a scalper or a day trader, you cannot take your trade in G1. You go to like H1 to take your trade. I have said it. But let me just give an example with this. I will come to this point. I'll come to this point and see how much am I willing to lose. Okay, let me use 100 pips. Let me use 100 pips, or let me use 80 pips. But I would not want to use this example because most of you will not appreciate. Let's go to a smaller time frame. I'll come here. Look at this price here. Look at where this market. I say I will enter at this low, this second low, this second moving average. See this market. Immediately I enter this market, I would have entered here for a buy. I might decide, yes, let me take this place, this low here as my stop loss. This is 81 pips. Or I might decide, okay, let me use something slow, something small to take my stop loss. I'll put my stop loss below here, 23 pips. I'll put my stop loss below 23 pips. This thing, this dotted distance here, they are called parabolic ZAR. It tells us where we need to put our stop loss, and you put your stop loss behind the parabolic ZAR, somewhere around here. This is 23 pips. I'll put my stop loss here, and look at this market went up. If you're trading with parabolic ZAR, we'll come to teach that. It's on your slide. You see parabolic ZAR. Behind the parabolic ZAR, that's where you need to put a stop loss. As you put your stop loss there, you ride the market. If it comes here, take your stop loss, no problem. It's 23 pips. If I'm using 0.01, 23 pips is just $2. $2.30. It's not too much. If I have a $50 account or I have a $100 account, $2 is nothing. I'll give the market. But if I do this thing like 5 times, 3 will go my direction, and it will pay off for that loss I have made. Hope it's very clear now.
Yes, sir. Yes.
All right. Thank you very much. Next question, please. Another question? Question. If there's no question in the next 1 minute, then we're going to continue with RSI. We're not going to waste time in RSI.
Hello,
RSI less than. Yes, Cynthia, please
hello.
ask. Yes.
Sir, please, these strategies of this moving averages, trend,
Please speak loud.
moving average, trend, are we to combine all this strategy before we execute a trade, or we are going to just
trade is not a strategy. Trend is a direction. Okay. Of all the strategy, I've just taught you 2 so far. Support and resistance is the bedrock, is like the boss, it's like the mother, it's like the father. The strategy we've just learned now is 1, psychological round number, 2, trend line, and candlestick. Of course, candlestick is price action. Candlestick is everywhere. It's anything you call your strategy. Candlestick is built inside. That is why I told you. That's why I keep hammering that slide. That candlestick in that slide is well detailed. You will see those candles. There are so many candlesticks you want to see on your chart. You can see 3 white soldiers, 3 black crown. But we are talking about the ones that you need. that will give you a reliable signal for a buy or a sell. That is what we have built into that slide. So what I'm saying is that the direction, the trend is that, let's see from here to here, this market is downtrending. That's one thing you must know. Is downtrending, is uptrending. If it's downtrending, what am I supposed to do? I should be looking for opportunity to sell. Where am I supposed to sell? When price is below the moving average, then I should be looking at opportunity to sell. Not when price is far, far away from the moving average. When it has touched the moving average and it wants to start going down, then we need to engage our sell. That is one strategy. We'll still talk about another strategy, but you're not using all. Cynthia, what you need to do is that as you backtest, if moving average is one strategy that you like, go and build on that moving average. Look at it very well. When it happens on your chart, what happened? Does it buy? Does it sell? If you have built that confidence, then Cynthia, use moving average as your strategy. Forget every other thing that we're talking on this intermediate slide, intermediate class. But for you to say, I want to use moving average as my strategy, you need to have a knowledge of other strategies so that you say, okay, of all the strategies, let me choose. Because if you say you're using only moving average, you don't have a reference point on which basis you are choosing. So when you have all of them, it's okay. Of all of these, I like moving average because the blah, 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 blah. Then you now be a mistress of moving average. I answered the question. Cynthia, I answered the question.
Yes, sir, you have.
All right, thank you.
Sir,
yes,
one more question.
Okay, Cynthia, Dan, hold on, please.
One more question, sir. In trying to analyze the trade, must we use two moving averages?
I said you can decide to use one moving average. I have told you how to trade using one moving average. If you want to use two moving average, I have told you that you are looking at crossover. Crossover, not crossover night. Crossover.
No, what I'm asking is, I'm trying to know whether the two moving averages, whether they are more reliable than using one.
And it all depends on what you want to achieve. One moving average is reliable. Two is more reliable. Do you understand?
Okay.
Yes. Two moving average is more reliable. At that point, when they cross, you take your bias for a buy or a sell. Because for them to cross, they don't just cross. They cross when there is momentum in the market, telling you a buy or a sell. But even if you're using one, that one would have crossed already. That price would have crossed that one. But if price have crossed the 2-period moving average that have crossed them, let me show you. Look at this now. Let me use the example. Now look at this price here. Price has crossed below this 2-period moving average at this point. Have you seen it? They are they are below the period moving average. You should be looking for opportunity to sell. And where will you sell? When the price come back as if it's buying to that moving average and gives you an indication for the sell. Please, that's when you initiate your sell. Don't come here, this place here now, this place here, and say you want to sell. You'll be making yourself a great disfavor. Go wait for it to go back to this moving average. When it goes back to this moving average, it gives you opportunity for you to sell and sell and sell. Hope it's clear.
Yeah, it's okay, sir. Thank you.
All right, Mr. Dan.
Okay, what I just wanted to ask from this
Can
chart.
You raise your voice a little?
Okay. I said what I want to ask from this chart here. You explained
I'm struggling to
explain the charts of buying using these two average. You said?
Dan.
Yes, sir.
Dan. I am struggling to hear you. That's what I'm saying.
Okay, can you hear me now?
Yes.
Okay, what I'm saying is using this particular chart, like you explained to me earlier, in the case of having opportunity to buy when it crosses the first line to the second one. So please, how about in the case of selling, like selling the trade?
See, Dan, look at, I told you I like using current price. Dan, look at what is happening now. Are you seeing what is happening in the current price?
Yes.
Then, when I am seeing this market now the question is, what is the trend of this market? That's the first thing you should ask. What is the trend of this market? This is H1. Let's go to D1. Dan, what is the trend of this market? What is the market doing in a higher time frame? Please respond to me. Is Dan still there?
buying. It's selling. It's selling.
Huh?
Hello?
It's selling.
The market is selling. Am I correct?
Yes.
Good. Now we are in H1 now. Dan, look at what is happening. The trend is that the market is selling in a higher time frame. Now, when we come to a lower time frame, what are we supposed to do? You see, in a lower time frame, market is buying. You will just be surprised, another candlestick will come up and buy. Another 1 hour candlestick will come out and buy. It could buy up to this point. The market could buy up to this point, which is the second moving average. Then, as it buys up to this point, now at this point, you're looking at candlestick that tell you want to sell. Now, that is when you need to do what you need to sell for it. And if it sells, it's going to create a lower low. Remember, trending market is going to create a lower low for you. Create a lower low. So, Mr. Dan, you would have eaten from here to this place. You would have gotten 237 pips or whatever time, but it will take out this low for creating a lower low. So you're waiting for this market to buy to this point. That is why somebody will tell you, higher time frame is selling. This one is buying. I am confused. What is it doing? It is buying to a resistance to sell. So that is what you look. So if you're looking at GBP NZ, you wait for this price to come to this place. When it comes to this place and you look at candlestick, at this point you see rejection of higher price, you need to initiate your sell, because as it sells, this market will be going down to take out this low. And if it takes out this low, it's going to create another lower low. And you'll be in that market riding the trend. It's like done. Have I answered the question?
I can't say yes, I can't say no, because it's breaking here. I couldn't hear you. So
can you hear me now?
Yes. If you were explaining at a point, it will just break. The screen won't move. I won't hear your voice, nothing at all.
But you can hear me now.
Yes, I can. I can hear you now.
I said if you look at D1 time frame, look at D1 time frame. D1 time frame. Can you see D1 time frame now?
Yes.
D1 time frame is doing what?
It's an uptrend, but from the current price, it's selling.
Good. The current price is selling. See, if the market starts selling for a day, yes. If the market is selling for a day, it will be difficult for that price to come back, to reverse. That's if price is below this moving average. It is very difficult for that day story to go back. It is difficult. That's one thing you must learn. It will be difficult for it to go back. There must be something that will make it to go back and close above this moving average. So what it means is that for that whole day, you should be looking for opportunity to sell this market. You should be looking for opportunity to sell this market. You understand? So now, what we mean that we'll go to H1. We'll go to H1. Look at H1. H1 throughout the day. Look at throughout the day. This is period separator. This distance between from here, the distance from here to this place, is 1 day. You see that throughout today, the market has been selling. Have you seen it now?
Hello?
Throughout today, the market has been selling. Now, the market moved from here. Let's say from here, you would have said, okay, let me buy.
The chart is still on D1, not H1.
Are you serious?
Yes.
If it's on D1, let me know.
It is, from what I'm seeing in your screen here.
Is it on D1? Is it on H1 now?
No.
Please, can somebody confirm to me that my chart is on H1 or D1?
Your chart is on H1.
My chart is on H1. So that means, hey, King, Your network is bad.
Your network, yes, his network is disturbing. I'm hearing you clearly. I'm hearing you.
Good.
Very,
So
very
your
much
network is bad. Actually, it's not my fault. You actually need to check the YouTube channel and see if you can get the video. It's actually nothing I can do.
I will check it tomorrow.
So what I said is that this market, we've gotten a direction from a higher time frame that the market is selling. So when you wake up this morning, your bias is that I don't want to buy this market. I want to look for opportunity to sell this market. If you are a price action trader, let me forget price action. If you are a moving average trader, you will not do anything within this place. You will not do anything here. Where you will start, even when the market came here, where you will do something is when the market came up to this point, then you should initiate yourself. You would have seen that you would have gotten from here to this place at least, and this is 140 pips. How many of you, as a newbie, will stay in this market for 114 pips? You will not stay. Yours will just be $10. Sorry, 10 pips, 20 pips, 30 pips. You run away. But even if you want to stay, this market has blessed you enough with 114 pips. If you're using 0.01, the market has given you over $14. $14. Sorry, $10. 100 is $10. 140. So okay, 114. So the market has given you about 11 pips, 4 cents, 40 cents, or 4 cents. The market has given you $11. So the market has tried, my brother. It has tried to give you $11. If you have a $100 account, you have made 10% of your account size for just today, trading the moving average. So now the next opportunity for a buy is that either you're waiting for this market somewhere around here, you're waiting for this market somewhere around here to come and touch this moving average, then you sell, or to touch this other side, then you initiate yourself. And as you initiate yourself, you're expecting that price will come and take out this move, and you continue to be on the trend. Okay, I think we've done justice to moving average. We've done justice to moving average. So many persons some persons are leaving and possibly network or something. We've done justice to moving average. We may not have to do relative strength index. By tomorrow, we'll do relative strength index and MACD. If possible, we'll do divergence. Relative strength index, MACD, and divergence. You can see it on your slide. If you have the slide, they are there. They are there. That is slide. This moving now, this candlestick pattern.
Sir George, don't forget to we have not treated.
Now this is MACD. This is MACD. This is MACD. If you have it, you can go through it. This is MACD. This is MACD. How to trade it? MACD crossover, histogram, charts, equilibrium of zero crosses of MACD. This relative strength index. Relative strength index. That is, and this is divergence. Divergence. You get all of these things on your chart. So they are all there. So you can ask for the chart and get your own chart so that you go through it and be prepared for the class. Our next class will be on Wednesday. We'll not have a class tomorrow. It will be on Wednesday. We're doing this so that you have time to digest what we have learned. So hopefully we'll be rounding off Wednesday. The next one is Friday. Hopefully we'll be rounding off the class by next week, rounding off intermediate so that we'll go straight to advanced. And advanced, we have said it, if you have not funded your life account, please try to fund your life account because we might not allow you entrance into the advanced class because advanced class, we'll see you like traders. We'll be discussing with you, we'll be taking live trade with you, we'll be taking you on mentorship and all of that. So please try to fund the account and join us on the advanced class. But for now, we're going to enjoy the intermediate class. Good evening, everyone. Somebody said I shouldn't forget what?
Say you shouldn't forget the native level. I don't know. I think we've not treated that.
Native level.
Yes, now.
Bros, native level. We'll leave our first. We'll finish this one first. Yeah. We'll leave the native level first. We'll leave the native level.
I mean, Sir Josh, the last time We tried opening an account for me. I don't know. It wasn't going. I don't know if you remember.
Who's talking?
Michael.
Okay, I know Michael. Okay.
Yes.
But I told you we need to chat. At the point I saw you in the afternoon class one certain time, I wanted to tell you to wait immediately after the class so that we'll put you through during the day. I saw you in the afternoon class. Am I correct, right?
Yes.
I wanted to tell you to wait so
last
that we'll put you through. But I think something distracted me. I went for a meeting that lasted for long. So I had to leave that class, that Zoom class, and I had a meeting which I so you actually have not, you still have not gotten that, done that, Navi?
Yes, I've not.
Please, can we chat tomorrow? Will you have time tomorrow?
Yes, I will, but I think it's going to be at night.
At night. Okay, I think at night, I'll give you time at night because now I'm actually exhausted and I need to have a section with my children also. So I think I will not have the time now. I'll beg for us to do that tomorrow. Tomorrow there's no class, so I think just chat me up so that I'll remember. I'll bring up a Zoom class. Zoom link. Then we'll know what to do about.
Okay. Thanks. Yeah.
All right. Thank you very much. All right. Good evening, everyone. Please do have a wonderful night rest. I told you guys not to trade today. The market was up and down. So let's see, the market will set by tomorrow. Let's see what happens next. So good evening, everyone. So please, what you need to do, backtest your moving average. Backtest it and backtest it. Check what happens on your moving average. Go to different chart, plot your moving average. If you're using phone, I would have taken time to discuss the phone, how to put your moving average on your phone. Okay, what we'll do is that on Wednesday, our class will start at exactly 8 o'clock. 8 o'clock will start the class. I will use from 8 o'clock to 8:15 to show you how to plot moving average on your phone. That means I will log on my phone, log in with my phone and share my screen and show you how to do that. If you have not, you cannot jump from 8 o'clock to 8:15. From 8:15, I can tell you the simple truth. We're going to RSI. And the people that come in will know how to get that video and watch. By tomorrow, we'll give you the YouTube channel, the YouTube link. So good evening, everyone, and do have a pleasant night rest. See you on Wednesday, or see you on the chat.
Night, sir.
Good night. Thank you, sir.
Yes, welcome.